And now we're going to get to the middle of the day, which is focused on investment opportunities. And soon after lunch, we're going to have competitions and some more fireside chats on investing in these. And I'm very honored to bring up Howard Morgan from First Round Capital, a friend of mine for about 12 years. And this is a very special moment. Watch out for the water. Howard.
I won't slip on it.
All right. They keep on falling. Let's do that and that. Everybody, let's give Howard a round of applause. Hey! So, Howard, we've known each other, as I said, about 12 years.
Yep.
And this is a fun, special moment for me because I've always been impressed with you and Josh at First Round Capital, even before it is what it is known today. And one of the things, you've been investing for many, many years.
34.
How many? 34 now. So have more wisdom than myself. In 2 sentences, just tell us the fund focus and what you're most interested in these days, and then we're going to dig into a very interactive conversation.
Well, First Round and I are interested in that very early stage, the seed stage, the first round, when the ideas are there, the people are excited about them, and we believe we can help them in shaping that into great companies.
And so that brings me to a perfect segue of what do you love and what do you hate about being a venture capitalist?
What I love is staying young. I mean, I was a professor.
Well, you're succeeding.
I was a professor for a dozen years, and when you're a professor, you basically stay around 21 because all the people around you are 21. And when you're a venture capitalist, you stay around 25 because the people got a little older as they started the company. And that's what I love, is seeing and learning new ideas and learning about new ideas and trying to stay as current as possible about new ideas. And what I hate is companies failing not because the ideas weren't right, but for some other reason, most commonly timing.
So talk to us a little about that timing. So there's 2 sides of that coin. One is timing of when to invest. One is the right time to start a business. So from your years of experience, what do you think is the reason that most people mistake on timing?
Well, the reason is optimism, right? So my blog is called waytooearly.com because I made my money investing at 2 stages, too early and way too early. And the way too early, for example, in vision and digital photography, we did meta creations in 1992, and there were not cameras in phones yet. So we had the digital photography enthusiasts, but it was a much smaller market. Albeit it went public, it did okay, but not the kind of thing it could have been. Similarly, when Idealab, we created Picasa.
I remember Picasa.
And which is still going great right now. But in terms of the actual exits for it, at the time, the growth was still slow. The retail market for software was dying because everything was happening on the web. And so we made some mistakes in timing. And Bill Gross at Idealab did a survey of a lot of the ideas we did, and basically said the most common reason our companies at Idealab failed was timing. They were too early. So in 2000, you had 15 to 20 million people on 56K dial-up. And so a lot of the ideas that we know about today and that are very successful today didn't work.
They existed.
They existed. Paul Baran in 1967 at the Rand Corporation has this wonderful sheet of paper where he says, now that we have a time-sharing computer terminal we can put at home, we could do restaurant reservations and banking and hotel reservations and airline and shopping. He listed all 30 things you could do with computer terminals at home, all of which are gigantic application-based companies today, none of which could work back then. So the problem is, as a technologist, as a former computer science professor, I can see that we can do this. I just too often don't see, well, but the public, we can't distribute it. We can't get the public to it. We can't get the distribution. We can't get the inventory. We can't solve some of the other problems about making it a company.
It makes a lot of sense, and I obviously, as you know, I'm investing at the same stage. And when you're talking about what's the right time, or when they're trying to inspire you, the entrepreneurs say, hey, we've got this great company, great domain expertise, and it's the right time. What data points help you validate to yourself that it's the right time, especially from all these learnings?
Well, so now we're much more careful about looking at customer acquisition channels.
Okay.
So we really want, whether it's a business to business or whether it's a consumer, how are you going to find your customers? Where are they? Are they identifiable in a way that you can reach them inexpensively? So, because in fact, any business, but certainly any business in the computing world is a very simple equation. Lifetime value has to be greater than cost of customer acquisition. Lifetime contribution margin has to be greater than customer acquisition cost. And when you can do that, then things work well. And we're now much more focused on that, even if it's image processing, if it's robotics. So we want to find out how to make those work.
And so very, actionable, because we try to have these discussions be big picture, but also get down in the nitty gritty. So when you talk about that, obviously makes a lot of sense. But are there traction metrics these days that you in first round are not only will they buy, or is it the right time and lifetime value? What kind of stage of traction? Is it just an idea, or is it some traction that will validate it's the right time?
We're somewhat agnostic. If it's a serial entrepreneur, someone who's done it before, we'll take a napkin sketch if we think the ideas are right. If it's someone who's a first-time entrepreneur, we want a little more traction. And traction means they've tested some of that customer acquisition. They've tested some of the ability to get a particular price for the product. They've shown that, gee, we can acquire customers on Facebook for 36 cents, but the cohorts we're using are only 400,000 people. If we want to get to 20 million people, we have to go to much more expensive channels. So a lot more about figuring out how you're going to get to enough customers over time for a low enough price. And it could be thousands of dollars if it's an industrial product. Can be pennies if it's a consumer product. But how does that match? And is there scalability? And the scalability is the thing that, at first round, is different than when I was an angel.
Right.
As an angel, I could invest in things that would stay much smaller and still make very good returns for an angel. When we're investing other people's money, as well as our own, we need something much more scalable.
So you mentioned earlier, the two pieces where if it's a serial entrepreneur and a napkin, it's because you know them. You've got a relationship. You're betting on them as people and the opportunity, and you've done maybe some research, but there's nothing, maybe no product, maybe no prototype. Right. So let's talk about the others, the people in this audience and that will read the book and see the video later, those people that you would love to find the opportunities. Mm-hmm. They don't know you, so you're not going to bet on the napkin. So what are things that most surface above the noise to get you excited for people that you don't know?
Well, first of all, somebody that I do know introducing me to them.
Okay.
So warm introductions. We have looked back over. We see about 4,000 deals a year at first round. We do about 40, and as we look back over the last 10 years of our history, we're sort of 11 years old now. We've done essentially no non-warm introduction deals. We've done probably 2 out of 400 deals where it came in as a pure cold call, if you will.
But is that because, and I'm in a similar way, but is that because there's so much coming into the inbox via people that you know, or is it that they're not saying the right things to get people?
We look at everything. So we really do look at them, but they're not saying the right things, or we don't get confidence from what they're saying, because what they might be saying is, here's an interesting market. Well, the answer is, sure, there's a lot of people. Because what differentiates the winners is execution, mm-hmm. right? Stephen Sondheim, having just the visions, no solution, everything depends on execution. And it really does depend on execution. We'll see in the course of 4 weeks 3 or 4 pitches of the same idea, because it's in the air. The technology has advanced just far enough. So, Google's now set up APIs for their image thing, right? You've got Clarify. So all of a sudden, we're seeing a lot of companies that are going to make use of those image APIs mm-hmm. to build things. The one who's going to win are the ones who can execute best. And that's where our knowledge of the people are, whether they came to us from a really warm introduction that says, gee, Evan's a terrific guy, he's a terrific entrepreneur, I've seen him succeed, you really ought to talk to him, is different than our getting something with almost the same idea. But we have no idea about how good you are or any proof points.
I absolutely agree. Even on our site, there's an about page, and if you want to contact me, I actually say above it, it's better if you don't email and fill this form out and you find somebody else introduced. And I think you can always find somebody to introduce, and there might be a couple of degrees away, but that execution is almost the right proof that
that's part of the proof. LinkedIn,
right?
if you can't go to LinkedIn and see, are you have a second degree connection to me, or maybe it's third, and work through that chain a little bit, that's
a positive signal.
Doing it is a positive signal. It shows that you know how to work systems and how how to get there, and
right.
that you're really working hard at it.
Okay, so let's talk about a couple more things regarding the relationship between entrepreneurs and investors, and then we'll talk about some opportunities and obviously questions towards the end. And if you've got questions for me, Howard, the harder the better. So value add compared to green money or colored money in Europe or elsewhere. What is the specific value add do you believe that you personally and then FRC helps entrepreneurs?
Well, there's a couple of things that venture firms deliver and the partners deliver. So let's talk partner first.
Okay.
I've got, I touched my first computer in 1959. Almost everyone in this room was not born by then. I have wealth of knowledge and experience gained at high cost that I can pass on to you at much lower cost. so there's that. I've seen a lot. I've seen a lot and done a lot of stuff over the years. I've seen a lot, and a lot of what the venture capital partner does is work with you on strategy and on personnel strategy, because the most important decisions you make as a CEO, as a founder, are hiring decisions. It's really bringing the right people into your organization, and we can help a lot with that, with setting up corporate culture. But what we've done at First Round is create a very different type of organization to help companies. So Josh Koppelman, when he founded First Round with me, I had funded 2 of Josh's prior companies, decided we wanted to build First Round as a company that scaled the way a company does, not the way a venture firm does. So venture firms basically scale pretty linearly with a low constant with the number of partners. And we wanted something that would either scale non-linearly or at least with a much bigger constant on partner time. And so what we found was in 2005, 6, 7 was instead of the partner being a router, so any question that the entrepreneur has goes to the partner first, and the partner then thinks about who should answer that question, either answers it or directs to somebody and sets up an email connection. But we became a switch. We created the First Round Network. And the First Round Network had all of the other First Round CEOs on it, plus the partners, plus what we now call our platform staff. So if you have a question, you put it on the network. And very often, that question will be answered in 10 or 20 minutes by another CEO on the network who's had that same problem a month ago, much more recently than I faced that problem, in the 80s perhaps. So it's been a tremendous expansion, because if you're the CTO of a 6-person company, we now give you a 210-person CTO peer group. And if you have a technical question, a question about a framework or some new APIs, or even about how to do interviews in engineering, you put it out on the CTO network, and 200 other CTOs look at it and answer you. So a lot of the value of First Round is the network, and there's our platform, as we call it. So we do summits, and we have a compensation survey which tells you, how much should you pay for a junior engineer for a seed stage company on the East Coast versus the Bay Area, et cetera. Huge resources that we provide to the company.
So in addition to that, so there's an interesting thing that I'm thinking about a lot these days, from the entrepreneur now to the investor side, is that the value add that we hopefully try to help the entrepreneurs when they want. How do you measure your success of that value add? And are you doing a good job, or do you need to do better?
Well, we always try to do better. We keep reinventing things in
Is there a way to measure? Do you guys measure?
We do a bunch of things. We do NPS measurements, to see how things are going. Obviously, from our limited partner point of view, there's only one measure.
Obviously, this is separate from the liquidity,
right? So
making money. Obviously,
right. We want to make money.
Absolutely.
We want to hope that we will help the companies do better. So we have one measure is kind of an NPS type measure. Another measure
NPS is what?
Net Promoter Score.
Okay, got it.
How likely are they to recommend us when they find a friend of theirs starting a company? Because for us, that's our lifeblood, is getting people to bring good deals to us.
And you measure that how? Meaning
surveys.
Okay.
We also measure the amount of services delivered to people. How many of them attended our salons? How many of them attended our CEO and CTO summits? How many read the review, how much posting are they doing on the network, all of those kind of things, which are a proxy for some measure that they're receiving value from us.
Okay, and let's skip to, we had a couple weeks ago, we started a couple sessions with online interviews, some great photographs of Howard, and one of the things key to this summit, obviously, is I asked you in 10 years, what businesses are going to get disrupted the most with computer vision?
Right.
As you mentioned earlier, you've seen different trends.
Yep.
So you mentioned manufacturing and shopping. Tell us a little bit more about why is it now, to your timing question?
Well, manufacturing has been using robotic vision, computer vision of various kinds, as the professors talked about before. But now we're able to do it at a much different scale. So I've done a recent investment, not a first-round one, personal one, in nanotronics, which has super high-resolution microscopy that will allow wafer manufacturing inspection in real time along the line, as opposed to taking the wafer off, taking it out, taking hours or days to do that. And I see it at John Deere. I'm on the technical advisory board, where the manufacturing lines are being sped up and made more efficient by having both vision inspection, vision finding parts, vision driving, creating self-driving vehicles that will pick up the inventory and deliver it to the right place on the production line. So I think there's a huge change that's happening in manufacturing.
And you think that's because of what aspect? Is it technological? What aspects of technological advancements or human nature?
Well, no, I think a lot of technological advancement in that the vision and robots that can now do like Baxter, that can do things, be trained very quickly. Don't have to learn, don't have to be deeply programmed, but they can model themselves after what people do. Finding parts, you don't have to kit the parts, you don't have to sort the parts. The vision system allows you to pick the right part out of that bin, so you can be a little bit quicker in putting things together. So I see that as helping to change manufacturing.
So do you think you think robots will be similar to the different platforms, which soon there's going to be an app store for robots, and everybody's going to be able to program their own robots with their own computer vision?
Well, I think you can do some of that now.
There's not many robot systems that allow that.
That is certainly going to happen for assembly type operation.
Right. And I would think for anything almost, and you're saying, okay, we can do it for assembly, we can do it for this over here.
And we're seeing things for inspection. So when you're painting the hood of a tractor, that's a pretty complex operation actually, and you want to inspect right away and make sure it's done right. Those things. One of the early applications of computer vision was the company, I forget, was called International Baking in those days. They made rolls, hamburger buns, and they had this customer called McDonald's. So they were making millions and millions of hamburger buns, and basically eggs came in and flour and sugar and so on and salt and whatever, and almost all human handling was gone. The only thing the humans had to do at the beginning was to look as it was baking to press stop when it was brown enough, because the timing wasn't perfect. And now they can use robotics for that. Mm-hmm. So one of the companies we've invested in, the June oven, which will be out later this year, you may have seen it, but it's a sort of microwave size oven, but it's not using microwave. But what it does, it's got a camera. It looks at what you put in. It says, that looks like chicken, okay, or that looks like cookie mix, and we'll figure out how long to bake it for, where to put the heat, when to put the heat, all based on vision, based on, okay, well, now we see it's browning. Okay, it's perfect. We can stop the cookies now. Or you can tell it, gee, I like them a little overbaked. But it's all computer vision, which you couldn't have, couldn't build automated ovens. And that's...
Like you said earlier, you probably thought 15, 20 years ago, we should be able to do this.
Right.
But now is the time, the convergence of computer vision and deep learning.
And deep learning, computer vision, and price drop. I mean, what has driven this really to the forefront in almost every industry is the volume of these things has made the cost of doing all of it cheap. Because when you're making hundreds of millions of these a year, everything gets driven down. The chip costs, and they have the money to pay for the algorithms to be developed, and et cetera. So that's really made a huge difference.
So another sector you said was shopping, which I believe is a couple companies you've invested in the past, which whether or not, for whatever reasons, worked or didn't because of timing, you think now...
I think we're seeing a lot more happening.
It's going to happen.
Yeah, and in several direct dimensions with respect to shopping. One is for the stores, better management of the stores and their inventory, and having vision systems watching where people are going in the stores, having the vision systems see what's coming on and off the shelves. The whole issue of checkouts from stores. We have with a quote. I don't know how many of you use the automated checkouts, but they're really a pain in the neck, right? I mean, you still have to stop. You still have to scan every item. We had a company that we did at Idea Lab called Lanehawk, which had vision systems that just looked at the bottom of the basket, at what was on the bottom of the cart. And because it turns out that the stores lose about $10 or $15 per lane per day with people putting stuff on the bottom, and they don't ever ring it up. And sometimes innocently, sometimes less innocently. It's a case of beer, and they have a party that night, and
they already started drinking earlier. So
the 18-year-old checkout clerk just happens to not notice that, but gets an invite. In any case, we were able to read the stuff.
Kids, so these are stories that you're hearing that are happening in real time. Right?
These are real time stories.
Right, good.
This is reality. But what we did was we were able to use vision to, as the stuff moved through, just recognize what the item. This is a can of Coke. This is a big thing of toilet paper, whatever, and automatically ring it up on the register. And the clerk then had to actively not see it. The goal, however, is the tunnel. The goal is for me to unload my cart onto a conveyor belt and have it be loaded back at the other end, and but with no scanning or anything. It's just so you using both vision, barcoding where it's seen, scales to weigh the produce.
I think I agree with you, but even more than that, there was a great commercial years ago. It might have been IBM or somebody where somebody was shoplifting with a big trench coat. And they put 50 things in here and walked straight out. And on the cash register, as the guy walked out, it goes zzz, all the different items and charge the credit card. So that's the ideal situation. I don't want to put anything down. I just want to walk out with it.
Yeah, and you can do that.
I can do that now?
We're now at the point where we could build that. And there are people building some of it with the vision systems that are around in stores. We did have some other companies that were using it for analytics, which is partly vision and partly not, just other techniques using Wi-Fi, Bluetooth, etc., to say, how many people walk by my store each day? How many stop in front of the window? What are they gazing at? We might have some eye trackers to see what they looked at. Did they then walk into the store? Did they go to the aisle that had that item? Did they buy it? Tracking at a level that we've never been able to do before. Now that ran into some privacy problems.
There's also challenges of now we're getting to, there's so much data. Figuring out that one signal or the two signals that are the high quality data.
That's what data science. That's what data science is about. And there's, the Simons Foundation has funded 4 data science institutes at big universities. That we have, and that's why we have big data now. The ability to use big data in ways we never could for training sets for image processing, but also for training sets for any of the AI tools. And creating rules, and probably with semi-supervised learning to say these are the interesting things. I want to increase sales of this item. What do I look for?
Get ready with your questions. We're going to be asking people for questions in about 1 minute. So, Internet of Eyes. What do you think?
Well, I was channel surfing yesterday, and I saw the Enemy of the State movie, which I don't know how many of you remember that movie, but and it was it's pretty scary. I mean, and of course, I've read The Circle by Dave Eggers. So, but it's there. I mean, there's no question. There's eyes, and they're used
business opportunities. How about for business opportunities?
For business, well, so we're investors in one of your sponsors, GumGum, which is using everything that people are seeing and creating interesting business opportunities with them. I think. Business opportunities, again, things like gaze and stuff like that, figuring out what people are in fact looking at, why they're looking at it, if we can pull some other signal out of there. Is it purchase intent? Is it aesthetic? I've seen that everything that stops Howard is blue. Maybe I should when I offer him the next items, I should offer them in blue instead of in yellow or red because he seems to react better to something of that sort.
And in my presentation earlier, I had the mirror in our home will have many different cameras. I mean, would you want that in your home?
Well, we have Alexa now listening to us all the time, and she's pretty helpful.
So that's a yes, it sounds like.
I'm not afraid of technology, but I understand the people who are worried about it, for sure. I mean, I read 1984 as a kid, and,
so did I.
And you see these movies, and you see the dystopic view, and we could get there if we're not careful. But if we are careful, and we allow us to turn those off and make it really easy to block them for a while, then I think it's pretty good.
Okay, questions from the audience? Right here. There you go, energy, there you go. Right here. We got 5 minutes left, perfect. Hey. Is the mic handheld working here? Speak loudly,
I'll repeat the question.
Go ahead.
I am Robin, I'm from a company called LDV. We produce mobile social games to generate data for deep learning models, and we sell basically things that recognize clothing to fashion retailers. So question, with the proliferation of algorithms for object recognition now and doing so well, do you think startups can really compete in that area, or do they need to focus on basically generating proprietary large data sets?
So Robin has got a company that's using mobile social gaming to get insights on clothing trends. What the question really, I guess, was, given the way big companies are playing in this, can a small company still compete, or do they have to build a giant database? To me, I think it's a great time for the small company to compete because you don't have to build that anymore. You can use the Google APIs or the Clarify APIs or some other companies' APIs. They'll do the recognition pieces for you. They've got the large databases. What you need to do then is to find the latest clothing, figure out whose it is. So we have a company we invested in, Project September, that's going to be mining Instagram. And a lot of people are starting to do that, right? And start mining. To the extent you can mine Snapchat, it's a little trickier. And then trying to create insights that are saleable to the manufacturers or for the users. So I do think small companies can still, or startups. We don't want to invest in small companies. We want to invest in big companies. They just happen to be small when we invest in them. And so they're startups. And I think startups can compete and grow.
I agree. Who else has a question?
Yeah.
No, keep talking.
I'll just yell it out. Matt Hugdale from Facebook. So when you look out there, technologies that people are excited about today, do you see any sort of in a similar situation to the story you told about investing in digital photos before the smartphone? Are there any technologies that you think the timing is too early on right now that people are excited about today?
Well, people are very excited about AR, VR, and we are too. And when I started investing in VR in 1995, that was way too early. We didn't have the processing power and so on. It's still on the early side for the VR. I think AR is probably closer to being really useful, that we're gonna see happening over time. But that's one that there's a lot of hype on. Humanoid robotics, the real androids, if you will. We're seeing a lot of proposals for that. That also seems like it's kind of a bit early, although I think we can see how to pull together pieces there. We do see a lot of things in the medical field now that where there aren't big enough databases of tagged images. So if you want to look at all the MRIs or X-rays or whatever that are done, there's only a few million done each year, and that, from a deep learning point of view, may not be enough. And plus, they're not all tagged, and you have to get them tagged. So those are areas where it may still be a little bit too early for some of these things.
Who else has questions? There in the back to the left. You have any questions for the audience, Howard?
Well, I mean, how many of you, in terms of VR, is one of the areas that we're very excited about because I've been looking at it for a long time. I have invested in Verse, Chris Milk's company, and another company called Envelop VR. Are you guys? How many of you have bought or are buying this year VR, high-end VR headsets?
25%. 25%. Okay.
Okay, so that's a little.
How many do you think will buy it next year?
Not much more. So,
Not much more.
So that's still on
So
the
it's
early.
still the same.
And this is an innovator vision audience. So that's kind of consistent with where what I think is the right timing for it.
So the next question, but very short, one sentence question.
Very quick. Okay. So based on what you said earlier, that you are increasingly looking at essentially unit economics, and you also want to invest at an early stage, aren't you discouraging people from trying to solve really hard problems? Or like, how do you stop people from, not trying to do that?
So it's a very good question, and the answer is that there are firms, whether it's Google Ventures or Peter Thiel or some other founders fund, that are going after the giant problems that will take 10 years to solve and cost $100 million. We're a small fund. We have to be capital efficient. So we don't mind trying to solve very hard problems, but we want a path to solve them with rational amounts of capital. We did invest in Planet.com, which now has 133 satellites in orbit. That we knew that was going to take more capital later, but we knew that with the vision systems and the databases they were going to build, there'd be a lot of early revenues from that. So part of solving long-range big problems is revenue may be very delayed. They may need too much capital for us. There are firms that love it. I love to think about it and do it where you can, but it's not a perfect sweet spot for first round.
Another question. I can't believe it. Do I have to repeat what I said this morning? Nobody has any questions? There you go. Oliver.
Hi, Howard. So I'm just curious, as an early investor in Uber, why didn't you include autonomous mobility in one of those on-the-cusp trends?
Well, I mean, I was asked for one or two. I mean, obviously, autonomous vehicles, autonomous driving, or mostly autonomous driving, because most of the states are going to require a human there to override. It's a very important trend, and we are, in fact, looking at that. We've looked at a bunch of telematics things. We did invest in Vinley. So it is an important area. It's just not as big in terms of the number of companies we're seeing as we are in some of these other areas.
So one more quick question. Yes?
Thank you. I'm Jacob Lowenstein. I run MIT's VR and AR community. Quickly, so given the investment in Envelop VR, given Google's recent announcement of Daydream, how are you feeling about mobile VR versus the more high-end premium, which you were kind of polling the audience on?
Well, yeah, the mobile VR is going to get people the taste for it. I think that's important. Look, putting out 1 million viewers with the New York Times got a lot of people their first taste of what it could be. The question with mobile, the experiences are going to be short, right? So you're going to be in a 30-second to 2-minute experience. You're probably not going to be in a 30-minute experience on mobile. But I think it's a very important gateway drug, as they would call it, to VR.
So two more questions to end up on. One is you see a lot of entrepreneurs. You've invested in many that succeed and have not succeed. In one-word answers, Howard, what's your favorite personality trait of an entrepreneur and your hated personality trait of an entrepreneur? In one-word answer.
Favorite is passion.
Right.
And least favorite is, I'm trying to think the right way to put it in one word, but it's basically cluelessness. And by that I mean, entrepreneurs come in all the time and they say, we're the first company to do X, and you go click, click, click on Google and you say, well, what about these 10? And they say, oh, you really have to understand the area you work in.
I think I agree with you on passion, and mine would be people that are selfish, extremely selfish. Can be a positive and negative in some people's minds, but for me, if it's not a team player, and to your point earlier about execution of people, it's a big negative.
Yes.
And this is more helping others in the audience think about what works and what doesn't. And then to end on one sentence of advice to help the researcher, because you know that world, that might be thinking about starting a business. One advice, make a decision.
Well, if you're a technical researcher thinking of starting a business, find a business partner. Find a.
How do you find that person?
Well, nowadays, there's the hackathon world. There's the entrepreneurial centers at almost every major university. There's the meetups in many towns. There are a lot of people who know they want to be in a startup but don't have the research and vision idea, and they want to pair up with somebody who does have that. Because we have found in the first round 10-year results showed that teams do better than solo founders.
Right. Okay. Fantastic. Howard, thank you very much. Look forward to finding deals here to co-invest with you. A round of applause. Great. Howard, thank you very much.